Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, September 11th, 5:48 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Crazy day in the market today. State of the market, still showing mild correction. This can switch back to uptrend if we see some continued strength off the back of the massive upside reversal that we saw in the market today. Check the trend gauge over here, several changes. Improvement in leadership had us go from bearish to neutral on leaders today, and also the 21-day short-term moving average from bearish to neutral, as the S&P 500 and NASDAQ 100 had massive outside positive reversals after a big morning dump, and led very clearly by semiconductors, big tech, but chiefly by semiconductors. Medium term, 50-day moving average still showing neutral, some improvement here as well. We're looking for multiple closes above these levels in order to get the arrow over to bullish. So what happened today? First off, Kamala Harris outperformed expectations in the presidential debate last night, and we had a CPI report come in before the open. The headline number was in line. The core number was slightly hotter than positive. Overnight, the futures were lower. We were near approaching flat when CPI came out. We dumped off of that number. That was an hour before the open, but by the time we opened, we were back near even on the S&P 500, slightly positive on the NASDAQ 100. Small caps not cooperating, and they didn't cooperate for the most part throughout the day. Second consecutive day, mid and small cap lagged, and breadth wasn't where it needed to be. But a big 1.6% drop in the morning over the first 90 minutes just turned on a dime at 11 o'clock into a big reversal to the upside, again, led by semiconductors and tech. Here are the final numbers. 21 over 21. This is our the leaders list for the week. 13 up, 3 neutral, 5 down, up an average of 0.8%. The big 8, led by NVIDIA being up 8.2%, was up an average of 2.42. The RG8, our 8 growth ETF composite, up 1.4. S&P 500, as I said, down 1.6 at one point, closed up by a little more than 1%. RSP, though, the equal weight, and here's that point about breadth not being there, equal weight, just barely positive. NASDAQ 100, up 2.2% after a big shakeout, equal weight up 1.2. The laggards were Dow, mid, and small, all up between 0.3 and 0.4. Global 60/40 stock and bond up 0.56. Our flagship GROTECTION portfolio up 0.6%. Let's get into the charts, and we'll start with the S&P 500. I'll bring up a 5-minute chart right away. I don't recall seeing a day like this in quite a while, but you can see over the past 3 days, there have been what look like downtrends just reversing on a dime into uptrends. A gap up on Tuesday sold off. That reversed late morning and trended higher into the close. And this was massive selling at the open just for 90 minutes, though. Held at that 5,400 level, turned on a dime the last 5 hours, very clearly trending higher. Let's go out to a 15-minute. And you can see that 5,400 level was tested on Friday, tested again today and held. So that's a key level to trade against now. We had been 5,500 was the key level for a while before breaking it last week and failing to get back above it during Thursday session and opening right near it. Or, sorry, not Thursday, Tuesday, opening right near it on today's session before selling off and then blasting higher through it a little after lunchtime today. Let's go to the 60-minute and we go back to some of the lines that we had drawn for various support and resistance levels. That 55.60 level was support during this tight range that we traded in for almost 3 weeks, and that's where we are right now. Bulls want to see a follow through, getting back up there before taking a shot at new highs. The downside now 5,400. About a, like I said, a 2 point, it was almost a 2.8% turn from low to high today. That's quite a range. Expanded volatility is generally not good for the market, but a massive positive reversal is good for the market. Here's that 55.66 level again over here. Here's 5,400 again over here. The charts have memory. The market has memory. 5,400, huge support level. Uh, Going back to breaking above it in early June, testing it in July before breaking through it, getting back above it in early August before coming down to it last week and now holding on today's shakeout that also corresponded with the 100-day or 20-week moving average. And the bounce off there, you can see regaining the green line. That's our short-term 21-day moving average, and also regaining the red line, which is basically flat, uh, climbed by a point today, but right around that 5,500 level is where the 50-day moving average is. So we spent 3 days below that, reclaimed it today. That's a key level that needs to hold on any pullback, is that 5,500 level, or today's break above that key level, and these two moving averages really won't mean anything. And we're also going to need to see. I did mention on Monday, I was a bit surprised on my weekend work. I saw more constructive setups and potential leaders than I expected to find with the terrible week that we had last week, but they were there. Uh, Improved the trend gauge for market leaders today to neutral. We've got multiple potential for low risk entry points. Today we just added one name and added back, according to our rules, the exposure that we should have above various moving averages, and I'll get into that when we go to the tail of the tape. There's the S&P 500 now, again, led by tech, and that this has been the big leader this week. If you go to a weekly chart on the NASDAQ 100, up 4.44%. Last week, NASDAQ 100 was down 5.8%. So clawing most of that back. Kind of the same on the S&P 500, was down over 4% last week, but a nice bounce this week. NASDAQ 100, so regaining. Uh, for a while, we were comparing, in our tail of the tape, what was the key of the day? And we get above the 150-day moving average. Excuse me, we did. Now, today, we got above the 100-day and the 21-day, and we're into the declining 50-day. This has been the relative strength laggard going back to a CPI report. Ironically, could another CPI report be the catalyst that turns big tech back into leaders? We certainly have seen a lack of strength in mid and small caps over the past week or so. And this very, very clearly is where the money was flowing today. All eight of the big eight up strongly. So there's the NASDAQ 100. Tomorrow we want to see if we can recoup this 50-day moving average, hold the 21 on any pullback, as well as that 100-day moving average, which you've got the three of them stacked there together. Dow Jones Industrial Average, big shakeout as well, undercutting the 50, but reclaiming the 21 by the close, bouncing at that 40,000 level, which has been a big reference point going back to earlier this year. Now the weakness. S&P 400 mid cap bounced at the 200-day moving average. That's great. But below the declining 21, the 50's flattening out below the 100-day. Continued strength is about all we can ask for here. Note relative strength, even with the bounce today, making a new low against where we were 3 weeks ago. So very clearly underperformance in mid caps and small caps since this big move higher that we had back at the beginning of July. Now on to the Russell 2000 small cap index. Kind of the same situation, underperformance over the last 2+ weeks. Didn't quite get down to the 200-day moving average. Back above the 100, below the 21 and the 50. And we'll look at the equal weight S&P 500, which while it lagged today, and again, you can see lagging all week after 3 weeks of outperformance, Undercutting, reclaiming the 50-day, getting back above the 21-day as well. So just one close below the 21. The last 3 days, the equal weighted has been above the 21. But now we've got to see if we're going to shift from the equal weighted outperformance that we saw for 3+ weeks and really going all the way back to the beginning of July. See if that's going to flip and start underperforming against the big tech heavily weighted market cap S&P and NASDAQ 100. Let's go to the VIX. VIX dumped, was up strongly. I mean, you're going to see the same pattern that you saw, except in inverse on the index is up strongly in the morning and then dumping as the market rallied. Back below the 21-day moving average, back below the 20 level. We want to see this get back below 16, which is ideal for volatility. USDR, the dollar, shakeout as well. Here's the 5-minute chart. Tight range mostly during the day after gapping up today, but the dollar has been off the lows, tested the lows, showing a little bit of strength. The stochastic is pointing higher for this as well. Let's go from the dollar to precious metals. Gold, tight range, very tight here. Break above this is a buy, forming a very tight triangle here is gold. Gold stocks, not quite as strong, but you can see the declining tops trend line. A move out on gold will probably correspond with a move through this downtrend line on gold stocks. Silver, still underperforming versus those two that I just showed. And Bitcoin, dumped early, but got strong as the day went along before flagging into the close, still below the declining 21-day moving average. Now on to bonds, broad bond index, kind of flat today, traded tight, but the reversal of what we saw with bonds, meaning when yields were coming down, the market was coming down. When yields got stronger, bonds got stronger. So these moved opposite. Today, there's the broad bond. Here's TLT. We actually bought this today on the stock weakness in the morning and the TLT strength also in the morning. You look at the 5-minute chart. Started weak. When it got strong and broke back above yesterday's high, we took a 5% position in TLT. We're down slightly on that as that turned while the market could shrink. We don't normally hold bonds, but because we don't diversify in underperforming asset classes, but if bonds are going to outperform stocks, and they had been over the prior week, we'll take a shot at them. You've also heard Dan talking a lot about interest rates being capped and how these are a better than average bet to go higher. We'll let the charts decide that, quite obviously, but we won't have money tied up with bonds if it can be put to better work with stocks. So let's look at yields here. TYX up just slightly, and TNX, the 10-year, same thing. So that's our inter-asset correlation. Tail of the tape, I had somebody contact us that a lot of this doesn't mean anything to them. It's very hard to decipher what the shorthand is. When on a day when there's not a whole lot going on with the market, I'll try to explain these a little bit better. Really, let me pick a couple here. Stochastic and the indexes. This is the technical analysis section. The stochastics, 2 of them are pointed up, 3 of them are pointed down. You want your stochastic to be pointed higher because that shows that where the direction that the momentum is going in, but you don't want it to be oversold. So sometimes we indicate that with an OS or an OB, as you see here on rates. NASI RSI, that is a trend indicator as well. Dollar going higher. Okay, bull case, initiate a rally and trend above the 21. We got 1 day above it today with the move. We need to see more. I mentioned the news. Harris strong in the debate. Core CPI hotter versus expectations. Tomorrow we've got jobless claims. Keys for Wednesday. Can the 21-day moving, or can the S&P 500 stay above the 21 and the 50-day move? Actually, no, I'm doing that backwards. The key coming into today was where would we be against the 50-day and the 100-day on the S&P. We tested the 100-day, blasted above the 50 and the 21. And the NASDAQ 100, we were pegging it against the 100-day and 50-day. We broke above that as well. Day count from up 2 to up 3. Uh, we were above the 8 and the 21. The slope of the 21 is still kind of flattish, so we want to see continued strength there. Slope of the moving average is important, provides additional support during pullbacks. Expectations positive with us being back above the S&P, the 21 on the S&P and the NASDAQ 100. Sectors strong, semis, and solar, and alternative energy. One of the theories, of course, is that that should benefit from a Harris administration. But tech very clearly led the way today to the downside. ITB builders, although it did come strongly off the lows. Banks, financials also bounced, but still finished down. Staples, healthcare, real estate, transports, and retail all on the weak side. As much green as we saw in the Nasdaq and the S&P, you wouldn't have expected this many sectors to be down, but this was money coming back out of those value sectors, flowing into tech. Early, everything was down, and then tech made the about face. In-house, our portfolio, we bought TLT. I mentioned that with the regain of the moving averages. We added back to UPRO and we bought Now, Service Now, raising our beta up from 0.48 to 0.86. Tomorrow, the keys. We're looking to see if the S&P can hold the 21 and the 50-day. See what the Nasdaq 100 does with the overhead 50-day. It's back above the 21, but those aren't configured the way we want them to be. Those moving averages, we want them stacked lowest to highest, but the underperformance has not given us that. And then leaders, can we get some leadership to jump up? There have been a few. There have been some surprises that held up while the market was pulling back, and maybe that was an indicator of what we saw today. Bottom line on the day, morning dump turns into a massive upside reversal led by big tech. All right, let's hit the 21 over 21 for the leaders and the laggards today. And first of all, we'll sort them by today's change. Actually, let's sort them by what we own. We'll go through what we own and then we'll go to that. Kava, for as strong a day as we had today, didn't do a whole lot, but it's consolidating very tightly right around this 120 level for 3 straight days now. TOTL, this is the bond, ended up flat today. ServiceNow, this has been a leader. It's been holding up since its earnings gap. Relative strength confirmed the new high today. Took a 4% or a half size position in that. Lilly bouncing, holding the 50-day moving average, regaining the 21 today. And TLT reversal to be down slightly on the day, but still holding that breakout level above 100. Ferrari, which we got stopped on yesterday, also reclaimed the 21-day moving average, possible re-entry there. So what was strongest and weakest today from the 21-21 list? The strongest was Affirm, bouncing off the 200-day yesterday, up 8% on the day on above average volume. This after the big gap up on earnings, day 2 follow through before a 5-day profit taking, undercutting the low of the gap up day, but bouncing at the 21 and the 200-day. GE Vernova, another possible Harris administration winner, relative strength confirming this, up 3.5%. Shark Ninja, not doing a whole lot, but trending sideways to higher above the 21-day. And I mentioned Lillian Now. How about losers on the day from the 21 over 21 list? We had 5 down. IoT, I think there was some insider selling on this, and it was down big time in the morning. But look at that big recovery, still down 2.7%. This was the one that, excuse me, made a day 2 and day 3 higher high after its earnings gap, but got into that pivot plus 20% area. Lockheed Martin, defense stocks were weak today, but it did bounce at the 21. Sprouts bounced off the 21. Northrop Grumman undercut and reclaimed the 21. And there's ITB also undercutting and reclaiming the 21. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone is 855 Real Wealth. That's 855 732-5932. Before we go, let me show First Solar. I mentioned solar stocks were strong today. Big break above this declining tops trend line on massive volume. Possible entry for us on this. Looking around this 244, 250 level. But you can't deny that volume. Um, Last time it moved out strongly like this, it had a very big move higher before starting to base. So I did want to mention that. Um, where was I? 855 Real Wealth. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Reminder, our flagship portfolio is named GROTECTION, dual mandate, grow assets during uptrends, protect them, go sideways first as things get weaker, and then re-engage if you need to. All these points that I'm drawing, these dual lines, we started getting defensive as we broke the moving averages. But now you break back above that level, it's very simple. You're arguing with the market if you don't re-engage with it. And it also gives you today, you've got a very clear stop at 5,400 level, 150 points on the S&P 500. That's 3% to the downside to that 5,400 slash 20 week slash 100-day moving average. Should absolutely hold if this market is going to continue to work its way higher. And with that, I'll end it for Wednesday, September 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. If you have any questions, either email me or ask them in the YouTube comments. We answer all queries that we see there. Thanks for listening and have a great day.